Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that'll be flashing on your screen. And every time you write to us on the number that is flashing on your screen, do remember to mention your name, the stock that you're looking to invest in, mention that name as well. And if you've already invested in a stock, mention the buy price, the quantity and the time horizon. Time horizon being very critical because in that way, we will be able to guide you better and take your query to the right expert that we have. We have on the technical front Kunal Bothra, who will be guiding you on the short term to the medium term time frame on the charts, while for the long term queries based on fundamentals, we have Ashish Maheshwari on the show. Very good morning to you, Ashish, as well as Kunal. Thank you so much for joining us on ET Now, and let's continue to take, or rather let's start taking queries that have already started being pouring in. This one is coming in from S. Manjunath, who's a senior citizen, writing to us from Bangalore. And Kunal, this query is for you. Tata Communications, our viewer has it for about 100 shares at a price of around 1,837 rupees per share. He's saying that he has some mild bit of profits. He's holding it since the month of May, apparently. So is it good that he stays put with Tata Communications, or should he look to actually move out of this to Reliance Industries or any railway or power counters? His choice of stocks are pretty enticing when you compare it to Tata Communications, isn't it?
Yeah, but I would probably look at it this way, Shell, that on one hand, you're looking at a stable chart, stable stock, and which could probably give you more steady returns on a medium long-term basis as well. But on the other hand, you have stocks like from the railways pack, which are looking out for more of a high-flying rally in the short-term basis. But then maybe if these stocks they get into a time-wise consolidation, you might see these stocks going into a corrective phase sooner or later. So the catch is quite tricky for both of these names comparatively. But Tata Communication is something which, in fact, in the morning also I had recommended a buy on Tata Communication. On the short-term basis, my expectation is that the stock is forming a bullish flag formation on the charts. Expectation is that the stock should cross back about the 1900, 1950 mark at least for the very short term. So I think if you are looking at it from a short-term play, I would suggest to hold on, and 1950 could be a good level. And maybe at that point of time, you can probably look out for repositioning. If you want to move out from this stock to some other name on the larger cap front, maybe Reliance or some other sector, then I think you can probably take that trade. But I think 1950 broadly could be a good target over the short term for Tata Communication.
All right, moving on to the next query. And Ashish, very good morning to you. The first query that I have is coming in from Swati, and she wants an advice on Som Distilleries as well as SAIL. Any of the stock that you like at this point for a fresh buy where she can stay invested for the next 2 years?
Distilleries, I think after a big correction from almost 150 levels, it is now getting consolidated this price, and we have seen good management commentary also of their volumes and increasing the market share. So at 110 rupees, I think Som Distillery is a good buy. Along with SAIL, again, this is a stock which has given good returns in this pack, but for quite some time now it is getting consolidated around current level. So instead of SAIL, I'll prefer more frontline stocks like JSPL or JSW Steel, which can give better returns compared to SAIL in the same sector.
Kunal, this one is coming in from Raman from Chennai, and he wants to know about 2 to 3 good auto ancillary stocks that he can look to invest in a perspective of about 1 to 2 years. Do you think that there are that many good bets in the auto ang space that one can take for the next 2 to 3 years or 1 to 2 years?
Yeah, I think there are quite a few. Motherson Sumi, Samadna Motherson, I think as the current name is, that's a chart which we've been discussing and I think highlighting over the last 6 odd months from 100, 120 odd rupees to now almost 200 mark where the stock is trading. It still looks very attractive at current levels. I would probably suggest a buy at current zone also, and then keep some powder dry in case if the stock dips down to that 175 mark or 180 levels. That could be a territory where you can look to average further. Sona Comstar is something which is starting to look attractive from the auto ang pack. That's another name. CI India, that's a chart I think which has also managed to make a strong comeback from 450 levels where the stock was consolidating 3-4 months back towards 600 plus mark where the stock is trading right now. CI India, that's another name which you can look out for.
All right. Right. The next query that I have, Kunal, is coming in from a viewer named Vijay, and he's writing to us for the first time. Wants your advice on Tanla platforms. He's actually bought 1,000 shares, but his buy price is 1,125 rupees. Though the stock is in the momentum today, but he's still at a loss. What to do in this one? And he also has 1,000 shares of IREDA, but his buy price is 179 rupees. After a great move, what's your view out here?
So I think first of all, it looks like that your position sizing for both of these stocks is a bit, not on the correct side. So you may have to probably try and work out your position sizing strategy, because for an extremely high risk stock, when you're trying to position with a much higher quantity, then I would believe that it's a bit of a recalculation which you need to, or recalibration which you need to work on. On the other hand, both the stocks, for example, Tanla as well as IREDA, both the charts are looking, I would probably believe, on a much more stable uptrend. Specifically for IREDA, I think the stock has done exceptionally well from 55, 60 odd mark towards almost 300 levels where the stock is trading right now. The trends are quite strong. You may look to maybe book out partial profits over here, because there could be a possibility that the stock would get into an odd phase of correction and then make a comeback again. So then maybe selling out, booking out some profits over here and then buying back again at maybe say 250, 260 levels could actually be a good strategy over the medium to long term. Tanla, on the other hand, I think after today's up move and the stock breaking past about 200 moving average, it's completing a flag formation on the daily weekly chart. So I think that could probably potentially take the stock higher to almost 1200, 1250 mark, at least over the short term. That's where you may consider to book major profits.
All right, this one is coming in from Sugumar. He's writing to us from Chennai, and he has been watching this program regularly, and also mentioned the fact that he's benefited quite a lot from Buy Now Sell Now program, and also thank you to both the experts is what he's mentioned. He's holding 1,000 shares of Campus Activewear at a price of around 295 rupees per share, and he's been holding on to Campus Activewear for the last 6 months, Ashish. He wants to know whether he should stay put with this counter or look to switch out of Campus Activewear right now. He's just making mild bit of profits in this one, but what's your view? Do you think that this particular counter merits a long-term buy?
No, I'm not that bullish as far as Campus Activewear is concerned. In my view, this has grossly underperformed after a high play post-listing start. And again, we have seen their profit came down from 23 to 24. And nothing exciting is happening in the company when market cap is almost 9,000 crore and you are making profit of 90 crore. So grossly undervalued in my view, and this is the reason the stock is not going anywhere. So instead of this, if you want to remain in the same sector, Metro Brands holds much better potential because the way they are adding range and stores, etc., they'll really outperform anyone in this sector, and the stock has delivered good return also.
Right, but sticking on to the consumer theme, Ashish, what's your view on Dabur? Because a lot of people have started talking about the consumption space as a whole. Amongst this, Nikhil Sharma has bought 32 shares. His buy price is 630 rupees. But how do you see the stock moving in the long term, and any targets if you have as well, please do share.
Yeah, FMCG pack is again an outperforming pack, and here stock like Dabur, Emami, Marico, they are delivering very good returns also now. So Dabur is again a good performer pick, and again the best part is Dabur is having good reach into the rural part of India, and this time as we are expecting normal monsoon rain, so companies which are having good penetration in rural India will stand to gain a lot. So Dabur will surely a winner. My target for the stock in next 6 months will be 700 rupees plus. So you can even add more at this price point. This much I can.
This one is coming from Ron, who's a long-term investor, Kunal, and he is sitting on profits on 2 counters, but he wants to know whether he should make switches out of those counters. One is IndusInd Bank, where he already is sitting on a profit. He wants to know whether he should shift out of IndusInd Bank to ICICI Bank. And the other counter is Tata Chemicals, which he's sitting on a profits. Wants to know from Tata Chemicals, should he go to Tata Consumer? Do you think these switches make sense if you are already in a profit?
Well, for Tata Chemicals, it may make sense because the stock has been a huge underperformer. But these are phases where a certain set of a stock remains to be an underperformer from the entire pack, and then if you try and go back to the larger cap performers or the better performers, and if you tend to buy them at the fag end of the price uptrend where these stocks are, there could be an upside for these names. But then the idea is to try and play out for the underperforming stocks, quality names, and then try to ride on to the tough times so that you can encash bigger upside when the stocks actually move up higher. So I think that should be an ideal strategy. But I think in this case, I would probably suggest that from Tata Chemicals, if in case you want to make that switch, I would probably believe that Aarti Industries could be a better bet at current levels. The stock looks quite strong, more formidable, less volatile as compared to the likes of Tata Chemicals. So maybe in that aspect, that could be a good strategy we can count for. IndusInd Bank again going through a tough time, but then ICICI Bank has already gone through a very steep rally. I think the stock is almost at 1240 or 1250 odd levels currently, and looking at the way many of the private sector banking stocks are behaving, I would probably believe that largely we may see these stocks getting into a gradual uptrend. So in case if there is a catch up which could be at play, say 3 months, 6 months, 9 months down the line, IndusInd Bank can probably try and give you that slight bit of outperformance as compared to ICICI Bank.
All right, then moving on to the next query. And Ashish, the next query is coming in from Krish. And first of all, he wants to thank you for your advice on Godfrey Phillips. He has made, that has done well for him, is what he is mentioning. But now he wants an advice on Vadilal. He's holding 25 shares. His buy price is 4,431 rupees. Can he hold this for the long term?
So Vadilal is again a stock which has given excellent return. If you see from 2,200, stock almost touched 5,000 rupees plus, and now getting slightly under consolidation. So still at 3,000 crore market cap, Vadilal looks attractive to me because consistently they have delivered very good numbers, and floating stock is just minuscule in this company. So in FMCG pack, again a good buy at 4,200 rupees, 1 year target 5,000 plus.
Right, so that's the take coming in on Vadilal. On that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, more stock queries will be answered, viewers, so don't go anywhere.
Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries then. And the next query that I have, Ashish, is coming in from Satish, and he wants an advice on Shakti Pumps. Can he go ahead and buy this counter for a long term? Any targets on the same as well? If you have, then please do share. Ashish, I guess you're on mute.
Yeah. Shakti Pumps again a multi-bagger stock from 600 rupees. We have seen almost 4,600 rupees mark in Shakti Pump in this year. So very rewarding return as far as Shakti Pump is concerned. And again, the reason is almost every state government and central government also is giving a lot of subsidy. Solar power pump, where Shakti Pump is having significant market share. Even if we see the last quarterly numbers from December to March, then net profit just become double. So it is again a good long-term story in my view, Shakti Pumps, and you can remain invested for a 5,000 rupees target maybe in next 6 months. If you have not bought, I'll advise to buy at 4,200 rupees level.
Right, the next one is coming from Bhaskar. He's writing to us from Hyderabad. This one is for you, Kunal. He wants to know about Oracle Financial. He has 50 shares at a price of 6,100 rupees per share. He wants to know whether he should continue to hold on to Oracle Financial or look to exit this particular counter. What's your take on this one? A spectacular performance, actually a multi-bagger of sorts for the viewer coming in, and also somewhere even the global earnings of Oracle also have played a role when you talk about Oracle Financial's stock price performance back home. But on the charts, do you think stay put with this?
Almost 2x for the stock.
Yeah,
I think from
exactly.
4,200 levels where it started off this calendar year towards the point when the stock is at 11,200, 100 mark. I think it's been a spectacular performance for OFSS, and I think kudos to the investor and viewer to try and hold on to the stock and ride the entire trend. So I believe at current levels the stock looks to be at the starting point of a major uptrend. Now what matters over here is a time frame, because if you're looking at it, say this as a short-term time frame charts, which means you've been advantages in terms of buying the stock at the cusp of a breakout and then riding the trend, then maybe at 11,000 plus levels, the stock will look a bit more overbought. But then when I look at this over the long-term charts and how the stock has come out of a major multi-quarter, multi-year consolidation, I believe that this could be a starting point of a major uptrend which could last for many years to come by. So it all depends on the time frame which you're looking out for. Ideally, even if you want to ride it from a longer term basis, you may just take out maybe 15%, 20% of the investments which you've already done onto the stock and then ride onto the profits majorly from a long term basis.
All right, Ashish, coming to you for the next query. This one is from Ramesh, and since we have seen a lot of traction in the shipbuilding counters, Ramesh wants to know which is your top bet and which is like the most rewarding shipbuilding stock that he can go ahead and buy even today, and if you advise to buy on dips, then which stock will that be?
See, there are three shipbuilding stocks: Cochin Shipyard, Mazagon, and Garden Reach Shipbuilders in PSU sectors. And we need to focus only on this particular sector because the major orders are going to come to these companies only. Only thing is, as these stocks have seen vertical run up, so some kind of cooling is taking place. Fundamentally, there's nothing wrong with any of these companies, and they'll continue to do well. But as the movement is quite swift, so some consolidation is happening. So my suggestion will be to make a portfolio of these all three stocks: GRSE, Cochin, and Mazagon. Maybe at 2,700 levels, you can look at Cochin. At GRSE, you can look at 2,400 levels, and Mazagon maybe 5,200 levels. But this sector will continue to flourish, and these three stocks will further deliver. But wait for some correction.
Ashish, coming to you, have you tracked the stock by any chance, Rashi Peripheral? Mr. Singh from Pune wants to know fundamentally is a good stock to be in for the next 3 to 5 years?
As far as Rashi Peripheral is concerned, I think they are into the mostly the distribution of hardwares and computer hardwares, mobile phones, etc. And not too much research is there on this stock, but only fundamentally I see this a more trading kind of stock Rashi Peripherals is. So instead of this, look at more other promising IT plays instead of a hardware reseller, in my view.
Moving on to the next query, and Kunal, what's your view on NTPC? But Bharadwaj wants to have a long-term view for the next 2 to 3 years. For now, he's already holding 950 shares at a price of 210 rupees. What to do with this one, and can he go ahead and add more at current market price?
Well, I think first of all, it's a very good strategy to hold on to the stock, and I believe that NTPC over the longer term looks very attractive. Now, there comes a phase where stocks come out of their huge underperformance for years, and the stocks start to show signs of a major rally initially. So initially, there is always a bit of a circumspect or a skeptical kind of an environment where if the stock underperforms for 8, 10 years, 20 years, and then all of a sudden you see the stock doubling, tripling in a short span of time. But that generally is a trigger that these stocks have restarted a major longer term cycle. So I think that aspect, I would believe NTPC could be a good bet. Now, I'm also assuming that NTPC would be a part of a broader portfolio, both on the larger cap front as well as on the PSU basket. So I think if that's the case and if you're well spread, then I think you should stay put with NTPC.
All right, Kunal, what's your view coming in on Lux Industries? This one is Dr. Vadil's portfolio. It's in his portfolio. His average purchase price was 1,620 rupees per share. He is making a decent set of profits on this one. Should he stay put with this or look to exit or in fact add some more in his portfolio?
In fact, I remember, Cheryl, I think just about a few weeks back, 2 or 3 weeks back, there was one more similar query when the stock was at 1600 levels. And I mentioned that the stock had just recently crossed above its 200-day moving average after almost 1.5 years of trading in a downtrend. So this could be a potential turnaround for the stock. It's done so far pretty well. But again, I would believe that this could be a potential big turnaround on the medium to long term basis. So if possible, I would suggest look to add, but maybe not a best price to start averaging at current levels. In case if it dips down to say 1650, 1700 mark, which could be a neutral point of this recent uptrend for Lux Industries, that could be a point where you may look to average further, but definitely a hold.
All right, the next query, Kunal, is coming from Naman Dera, and he has bought Rosell India His buy price is 100 rupees, average price is 607, but he bought this only for the trading purpose. So just on the charts, if you can help him what to do with this one.
I think you should continue to hold on, and I've been tracking the stock over the last many years. I think especially at a point when the stock was a small cap around 70, 75 odd point, towards a point where the stock now is at 500 plus levels, Rosell Industries, and I think recently, if I'm not wrong, the stock hit a high of 640 or 650 levels. I think it's a very interesting chart. Longer term basis looks very attractive, and I think if you've been holding on to it, I think you should continue to do that for the medium to longer term, say for the next 18 months at least.
Kunal, just quickly coming to you, because we have a viewer, RK, who is an ardent viewer of us, or is an avid viewer for sure. He's saying he is in need of some funds. He is holding some 3 shares, and I believe it is one is AU Small Finance, Aster DM and Som Distilleries, as well as Patel Engineering. He wants to know, out of these, which one should he exit in order to actually get some more funds? I'm not sure if he's in profit in any of them, actually.
Yeah, so I'm assuming that you're in profit and you're looking to book out. I would believe AU Bank, Aster DM as well as Patel Engineering, all 3 of them are showing signs of weakness on the charts. And I think some of them will just start to show recent weakness, which could probably engulf into these stocks going into a decent downtrend over the next 3 to 6 months. So it's a good time to try and book profits from all 3 of names, assuming you are in profits.
All right, then moving on to the next query, and Ashish, this one is from Padma, who's a senior citizen, and she wants an advice on GMDC as well as New India Assurance. Any of the stock that you like at this point in time amongst these 2 for a fresh investment, maybe for the next 1 year?
So GMDC again a stock which is down by 100 odd rupees from its 52-week high, and getting under quite long phase of consolidation. So instead of this, other PSU stocks are much better bet. So I'll suggest instead of this, you can look at RailTel or BHEL kind of a stock, which can be one of the beneficiaries of some of the budget announcements. As far as New India Insurance concerned, in my view, again, instead of looking at public sector insurance companies, I'll prefer more private sector insurance companies. So I'll prefer more ICICI Lombard Insurance compared to New India Insurance, because the kind of growth this company has shown in health insurance and overall premium collection over last few months, this stock is still having a lot of potential.
A quick note for all of our viewers who are writing to us, please avoid reposting your query, because what happens is it skips the queue in the order that we are taking the queries, and then we end up missing your query altogether. So avoid reposting it. We will take your query as and when we can, but yes, just avoid reposting it, and that way we end up skipping your query altogether. This one, having said that, this one is coming from Achar, who is writing to us from Madurai, and he wants to know about Engineers India and Cochin Shipyard. They are in an upswing. They have been in an upswing for a while now, Kunal. He wants to know, are these a good bet to take right now at these levels, or should he look at some other counters?
See, you can. So, ideally the best case scenario is that when stocks run up higher, and I think this could be a general advice as well, that when stocks run up higher, the only tweak which you can do is try to drop down your position sizing, because then if you're caught at the high end of the prices, even if it's a short-term play, then at least you have a quantity which is on the much lower side, and then you can keep on scaling the quantity as per the comfort. If the stock drops down to say 10%, 15%, 20%, depending on the beta and the run-up the stock has already seen. So I think that could be a better strategy. So I think in that aspect, I would recommend that both Engineers India as well as Cochin Shipyard, you can consider buying. But as I said, drop down your quantity. If you're looking at say buying, I would look out for say 15% to 20% of an average buying, which you would ideally have done in a normal scenario. So I think that could be a good starting point for these stocks at current levels.
All right, the next query that I have, Ashish, is coming in from a viewer named Satya, and Ashish, he wants an advice on JTL Industries. Is this a correct time to enter this particular stock for the next 1 to 2 years? I'm not sure whether you track this one or not, but any views here?
Unfortunately, this is not in my tracking radar.
No worries. Moving on to the next one. Ashish, your view on Indus Towers. Rohit from Bangalore is holding more than 2,000 shares, and his buy price is quite attractive at 190 rupees. Sitting at great profits in this one, but good time to book some profits out here, or whether to continue holding on. He can stay invested for the next 12 to 18 months.
No, I think you can remain invested here for 12 to 18 months. So the stock is almost at 52-week high. And in this year, the stock has given 300% kind of returns also if you see full 1 year. So my suggestion will be to remain invested in performing stock. You can have some trailing stop losses still, but as the fundamentals of this particular sector, telecom is changing, these companies will do well. Even we have seen performance-wise, their net profit become three times from 2,000 crore to 6,000 crore in FY24, and this year, as their recoveries are quite fast from Vodafone, etc. So they may even do 8,000 crore kind of profit in this year. So there's a stock to remain invested.
That's the take coming in on those queries. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. And let's continue taking your queries then. And this next query that I have, Kunal, is for you. It's coming from S. Balaji from Chennai, and he has about GNFC at a price of 700 rupees per share. He wants to know whether he should continue to hold on to it or exit, and also if he can buy now New India Assurance and Sakuma Exports at current levels. In fact, Sakuma Exports, I must note, Kunal, over the last 2 weeks, the amount of queries that we've got on this counter, even I'm intrigued to know, is it something that the charts are throwing up on this one, 115% in the last 1 year?
Well, yeah, I think Sakuma Exports on the charts is recently getting into a major breakout. This is almost like a 7 or 8 year breakout. 2017-18 is where the stock had made a high around 40 odd rupees. Recently, the stock made a high or just came back to that high of 40 odd mark. So I think it's showing signs of potential major breakout, and this could and the recent volumes over the last 2 months, I think, is also on the much positive side. So you may consider the stock, and the best part is that it's now almost 20-25% lower from that breakout level. So which means it could be a good starting point, purely as a as a trading play, or maybe some allocation, or smaller percentage of allocation has to be allocated over here. GNFC on the other hand, I think would be a good bet, but again, I think there are 2 points to consider. One is the susceptibility of the stock in terms of news flow. We know that there's budget which is lined up over the next couple of weeks. So I think that aspect, the fertilizer names, they generally tend to get a lot more volatile. But I believe also on the other hand that the stock is very high risk in terms of or high beta in terms of the price trend. So in that aspect also, you'll have to probably try and size your positions quite aptly. But at current levels of 680, 685, I think it's a good bet.
All right, moving on. And Ashish, do you have coverage on SP Apparels, and any take on this one? Because a viewer named Thomas George has bought 300 shares. His buy price is 815 rupees. But can he hold this for the long term?
Yeah, SP Apparels, if I see fundamentally, it's a very good company, and yeah, I'm expecting again in this budget, you may see some announcement coming in for textile sector also. So there's a reason other textile stocks are already inching up and almost near 52-week high, and SP Apparels is again a good company in this particular sector. So you remain invested. 1 year target maybe 1,000 rupees plus. It's slow and steady stock, but surely it will give you return.
All right, this one is coming from Tushar, and Kunal, this one is for you. Out of GAIL and MRPL, which one do you think is a good investment for the short term, given the fact that there is a renewed focus that we are actually seeing in the oil and gas space? So ahead of budget, do you think out of these two, which one should one bet on?
So I'll add to the confusion, add up ONGC and oil as well. I think all 4 of the stocks are looking attractive. If you ask me, I think in an ideal scenario, you should probably try and allocate 50% into or 40% into the likes of MRPL and oil, and the balance 60% into GAIL as well as ONGC. I think all 4 stocks are looking very attractive.
All right, Kunal, what's your view on TCI Express? Prasad from Bangalore is holding 40 shares, buy price is 1,300 rupees. Is that a hold or sell at this price point? He can stay invested in for the next 1 year.
See, I would suggest to just hold on to the stock as of now. I think for the first time in the last 1.5 years, from 2023 start, the stock is showing signs of some improvement. Volumes have moved up higher. The stock is trying to challenge its 200-day moving average twice in the last 1 month. So I think the ingredients are there for the stock to start off a fresh uptrend. As of now, it suggests a hold, but in case if the stock breaks past about the 1400 levels, that could be a trigger point that the stock is looking to restart a very strong uptrend and ending this phase of 1.5 to 2.5 year of major correction. So as of now, hold, but above 1400 levels is where there could be a lot of confirmations for the stock.
All right, and as we've been taking our queries, we have the markets that are fresh record high levels once again. For the Nifty, we've surpassed 24,600 mark on an intraday basis. So yes, great going for the markets, great going for us on the show, because we have a lot of queries still pouring in. Let me take this next query then. This one is coming from Diman, and he wants to know about water treatment industry and which stock that he can look at, particularly in this industry. Ashish, he's saying that there are news, and in fact we've also witnessed water scarcity in various parts of the country. Keeping that in mind, what's your take? Water treatment company, do you think is a good industry to enter into or sector to enter into, and which stock do you think stands out?
Scarcity is something just tip of the iceberg, but this industry size is just going to skyrocket in coming time, because almost all municipalities are undertaking bigger projects for water purification, rainwater harvesting, etc. So two companies, Vartech Bawag is again industry leader in this segment. And recently PCBL has also acquired one Pune-based company where acquisition is done now. So PCBL is now my pick number one, because now once this numbers will get consolidated, PCBL numbers are not going to be same like earlier. So PCBL is my pick number one, and Vartech Bawag maybe pick number two.
All right then, but with this, viewers, let's start taking all your queries in the rapid fire session. And the first query is on HDFC Bank. Kunal, viewer named Salu has bought 100 shares, buy price is 1537 rupees, but he wants a short-term view in this one. Hold or average more for the momentum?
Not to average, just look to hold on. Maybe 1650, 1685 could be a good short-term target for HDFC Bank.
Alright, this next one is coming from Neeraj from Noida. He wants to know about ONGC. Kunal. 263 is the buy price, 201 shares, book profits or hold, adding to his confusion.
Hold if you are medium to long-term investor.
Alright, Ashish Kumar is holding HPL Power. His buy price is 550 rupees and his, I beg your pardon, buy price is 90 rupees, quantity is 550. Good time to book out profits or continue to hold on?
No, I think continue to hold on.
Alright, you spoke about Campus Activewear, Ashish, but Bata 100 shares, Vinod has at a price of 1,374 rupees per share. What to do? Stay put with this one, look to exit. Ashish?
Yeah, Bata exit.
Okay.
Alright, the next query that I have is coming in on KC International, and Kunal Kumar wants to know, have your take on KC International. Buy price is 950 rupees. View for the long term.
Continue to hold on, potentially near 825, look to average further.
Alright, we have a patient investor, Bharti, who's writing to us from Dubai. She has REC shares 2000 at a price of 180. She's been holding on to this since 2018. What's your take on this one? Ashish, I think we've lost connection with Ashish. And let me take it to you, Kunal. What's your take on REC? Okay, Ashish is back. Ashish, if you can hear us. REC, what's your take on this one? 180 is the buy price. Stay put with this.
3-year target 1,000 rupees.
Alright, Ashish, amongst IRFC, IREDA and Zomato, which stock do you like for a long-term investment? This query is from Baiju.
All these stocks are good for long run, can buy all.
Alright, this one is coming from Manish. He's writing to us from Ahmedabad. Kunal, Sumitomo Chemicals, 504 is the buy price. What's the horizon for the next 1 to 1.5 years or so?
Short-term target closer to 540 for Sumitomo Chemicals.
Alright, but with this, viewers, it's time's up in this edition of Rapid Fire as well as on the Buy Now Sell Now show. Thank you so much, Kunal and Ashish, for joining us today and helping all our viewers with their stock-related queries. But with this, it's a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for watching, but don't go anywhere. Markets at noon will take the action ahead.
If you like this video, then like, share and subscribe to ET Now.